Hello and welcome to the weekly market commentary. I'm your host Alex Chalekian of Lake Avenue Financial. Let's review the markets from last week. The markets closed slightly lower. We saw the S&P 500 down by 1.54%, the Dow was negative 1.48%, and the Nasdaq lost 0.71%. We also had some major economic reports from last week. ADP employment increased by 212,000, payrolls increased by 295,000, and the trade deficit narrowed to negative $41.8 billion. Now let's take a look at our focus list for this week. So last week we saw the Nasdaq Composite Index pass 5,000 for the first time in 15 years. And as quickly as the hoopla started with the media beating the drum to 5,000, the party was over. The Nasdaq pretty much slid down the rest of the week and ended up lower. If you watched my special report video last week, you would have heard my concerns for the Nasdaq being in another bubble territory. This time, not because of the technology sector, but more my concerns over the biotech sector. And like clockwork, the biotech sector sold off last week. We're keeping a close eye on the sector as it will tell us the fate of the Nasdaq index. Wall Street was buzzing today over the Apple Watch. Many traders were glued to the screen as Tim Cook unveiled the much anticipated wearable technology in San Francisco. As the event went on, it seemed that traders were not impressed with the announcement. Shares of Apple were up $3 at one point during the event, and then they came down to pretty close to flat before we started taping this video. It looks like the watch could be pretty useful for those with a more active lifestyle, meaning individuals that like to run, hike, work out, etc. They are also trying to make a push to have the watch be more of a fashion item, but based on our own surveys that we did amongst our clients, most of them did not think the watch would be something that they care to purchase. And pretty much none of them would consider it a fashionable item. It's hilarious to hear people like CNBC's John Ford say that the watch will be worn by the fashion forward. Really? I can't see people in the fashion industry or those who love fashion trends wanting to wear a watch and change the color of the strap to match their clothing. Something like your phone is a necessity at this point, so it's understandable that people would want to accessorize them and make it unique. But I can't see the Apple Watch being a necessity at any time soon. But this could have been said about many other items that Apple has launched, and they're the masters of making you wonder how you live without it. Currently, we have to remember to charge our cell phones, tablets, laptops, cameras, and in my case as a Tesla owner, I charge my car. Now I have to remember to charge my watch as well? Ultimately, as a shareholder of Apple, we have to take into consideration as to what this new product and ultimately a new platform will mean to the bottom line. It's obvious that Apple is trying to give its consumers one more reason to stay in the Apple ecosystem. But will it move the needle financially when the watches are a $30 billion industry and Apple makes that amount in about 10 weeks? I really don't think so. Now, we still like Apple as a company, but we might recommend lightening up on the shares at this price level. Please contact us if you have any questions in regards to Apple. So why is good news in the economy bad news for the stock market? Last week, Barron's said, the February jobs report showing a 295,000 gain in non-farm payrolls, about 60,000 more than predicted by economists, plus a dip in the unemployment rate to 5.5% from 5.7% in January, evidently was enough to convince the markets that a June Fed rate hike is now likely. A stronger U.S. economy should be better for the U.S. stock markets, but in this instance, it's not. As more traders are ready to hit the sell button, we're going to keep an eye on this as the time goes by. Lastly, shares of Blackberry dropped 7% today after Goldman Sachs cut it to a sell rating. Goldman also cut its price target to $9 from $10, noting the 60% rise in share value since John Chen became CEO in November of 2013. They expect widening losses in 2016 and 2017 due to the shortfall in high-margin software and services revenue instead of Blackberry returning to profitability. Now, I couldn't disagree with this more. John Chen has a company running on all cylinders. It kind of seems odd that Goldman waited to announce this on the same day as Apple's launch event. Makes you think, huh? Well, we still think Blackberry is a buy at this price level. Thank you for watching our video. We'd love to hear your comments. To watch some of our other videos and read our blog posts, please visit our website, lakeavfinancial.com. There you'll be able to subscribe to our weekly newsletter. You can also find us on Twitter, LinkedIn, and Facebook. And remember, here at Lake Avenue Financial, we manage your wealth with your goals in mind. Thank you for watching.